Welcome to another episode of AKA Ask Kevin Anything. Here's our question of the day. A revocable trust permits the grantor, that is the person who creates the trust, to establish what is covered by the trust, who will make decisions, how assets will be managed, and who will be the beneficiaries. The grantor can change any or all provisions up until his or her death, at which time the trust becomes irrevocable. Prior to death, the grantor reports the tax transactions on their own individual tax return, Form 1040. After death, the tax transactions are reported on a separate trust tax return, Form 1041. The biggest misconception regarding this estate planning tool is that it will reduce taxes and offer asset protection. Actually, even the taxpayer may spend time and money setting up the trust and retiring assets in the name of the trust. There's actually no tax savings or asset protection. So why would anyone establish a revocable trust? The benefit is primarily threefold. First, the revocable trust may help avoid probate. Reasons to avoid probate can vary from state to state, but typically involve privacy, contestability, and potential delay. Keep in mind that for many financial assets, you can avoid probate by simply adding a transfer on death, TOD, or payment on death, POD, provision to the account. It is usually a 1 or 2 page form that lists the beneficiaries and doesn't incur any legal cost. The second benefit is that it establishes management of assets if the taxpayer becomes incapacitated or if the beneficiary requires asset management services. However, other legal documents, such as a durable power of attorney, can provide asset management assistance. Finally, upon death, the trust provides privacy, whereas a will is public information. Many people debate the use of revocable trust. However, I believe that they are particularly beneficial if someone owns real property in multiple states, if one of the beneficiaries has special needs, or when dealing with blended families. Finally, every family is different, and their situation may indicate the need for a revocable trust even if the aforementioned attributes are not present. And that's okay. As I said, every situation is different. What we want to avoid is getting caught in a debate and not doing anything, which could result in the taxpayers' families, friends, or associates having to get a court-appointed guardian if he or she will become incapacitated. That court-appointed guardian seldom knows you or your beneficiaries, and yet you will compensate him or her well for their time and their court oversight. If you're not sure what might be best for your situation, please give us a call. We would be honored to have the discussion with you. We can also refer you to an attorney if you don't already have one. Thank you for watching. Please send us your questions. For any question that we use on a future segment, we will give $100 to a local food pantry or other local food organization. So together, we can help our community.